Hey everybody, this is John and welcome to the free video. Let's kind of dive in here and look at one stock I like kind of regardless of what the market is doing. On the daily chart, we do not have a squeeze on DocuSign, but we do have, I just literally signed a DocuSign, ironically. But we do have a kind of a buy signal here. But more importantly, we got a really strong buy signal on the 4-hour chart. We got the ready, we got the aim, we got the buy, we got the squeeze, and a new highs to the 1272 extension would take us to about 316. So I like that as a trade. I think it's something that could happen regardless of how the markets react to the employment numbers Friday morning. Of course, if the markets puke, it's possible DocuSign pukes as well, but the setup stands on its own. And of course, it has shown and proven itself to be resilient against the general gyrations of the market in the past. If we look at some of the big names here, of course, we have seen a lot of these get clobbered at earnings, and this kind of continues to go on. Roku, Etsy, Pinterest. I mean, the list kind of goes on and on. Not everybody, but a lot of people are getting kind of whacked after earnings, which begs the question, when is the QQQ going to come back to earth? Do we just blindly buy and hope for the best? And we've got squeezes and things like that too. So on the one hand, it's all pretty good, but it is extended and it is on some of the lightest volume of the year. And finally, last but not least, these new highs are happening with a record amount of stocks trading below their 50-period moving average. The short answer to all this is that is not sustainable. So, it doesn't make sense to short this because it's not going down, but it also makes sense not to be 100% long with options that expire in 15 days, because I do think that if we get, a pullback, it could be pretty violent. At the very least, a move back to the mean, but potentially something a little bit bigger. Maybe something more like we get to -3 ATR again. It does happen from time to time. But the main point is that there's sometimes in the market where on the long side I'm very comfortable making big bets. I'm not big bets to the long side, I should say. In this particular market, I am not comfortable making big bets to the long side. I am long what I would call a normal size position in DocuSign. I've got some puts on IWM as a hedge, and I'm just kind of playing it a little close to the vest. I do want to see how things happen with the employment numbers, but also I'm really watching the structure here to say, when is this going to end? And the last thing I want to show you here is the transports. And the transports typically move weeks ahead of all the other indexes. And you can see they peaked here in June, really in May, and they've been selling off ever since. This does not happen in a vacuum. Anytime I've seen this in the past, even though these things may move, a month ahead of everybody else, it kind of shows you the blueprint of what to expect from the S&Ps. So, and possibly the Qs. So again, just another reason just to be cautious. Certainly, you don't want to short something just because it's quote unquote too high in terms of the Qs, but there's a lot of warning signals out here that just say like this isn't necessarily the best time to load the boat long. All right. Hope it helps. You guys have a fantastic evening, and we'll see you at the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me